And I think the stackers are the only one who are going to come out of this fine, or perhaps even wealthier than they are right now.
Hello and welcome. Thanks for tuning in today. The markets in general have taken a serious beating recently, and the stock market seems like it might be in panic mode. Here to help us unpack this market meltdown situation is Oren Elbaz, also known as the Silver Hermit. He is a market analyst and sound money advocate. Oren, welcome back. How's it going today?
Hello, good evening. As well as it could be.
Yeah,
Thanks.
it's been a rough market lately. Well, it's great to have you on to talk about this.
Thank
What do
you.
you think might happen with the stock market this week? And what could be in store for stocks in general? Um, we did see silver get drugged down with the stocks last week. Do you think that it will keep moving with the stocks much longer like it has been recently?
Well, we're not sure. We've had two very difficult days in the stock market, and it seems as though it's going to continue if the futures are any indicator to that. And we were not sure. We were talking in recent months about the possibility of a recession in the United States, and that there were indicators pointing to that way. And as far as I'm concerned, the recent tariffs, the declaration of tariffs by the Trump administration, I consider that to be an excuse for a market sell-off that was, in the cards already. It always happens this way. The market is as though looking for an excuse to go where it already wants to go. So we
That
were talking about the possibility that gold and silver are going to get dragged down with the rest of the market, the same as we've seen in previous recessions, in previous panics. And unfortunately, this is exactly what's happening, at least right now. Now, whether it's going to continue or not, that's a good question. Right now, we're seeing plenty of volatility. We're seeing there's uncertainty, and this uncertainty is going to continue. I can see it either. I can see either the market continuing to sell off. That's a possibility. I can also see the market correcting, bouncing from here for a while, for a few days. It's impossible to say. The only thing I know for sure is that I'm very pleasant that I'm invested in gold and silver right now. They seem to be, although they're selling off, it seems to me that long term they are the safest place to be. I'm not really concerned about them long term. I think everything we're seeing right now is just noise. I'm not panicking. I feel fine. I'm even considering buying the dip.
I feel the same as you. I was actually looking at some stuff earlier. Uh, it's highly likely I'm going to be buying. I'm almost hoping I didn't miss the lowest entry point we might have seen down there in the mid $28 range. But because of the way you feel, and I feel the same way you do, I do wonder if some investors that aren't really in the metals right now might end up feeling the same way. If they went through a long weekend of stressing out and they decide they want to sell out of some of their positions, I'm hoping maybe some of those people, as few of them as it may be, might decide to go park some money in gold. And if they look at the silver market, who knows? Maybe a couple of them will even consider silver um, with what's happened to the price recently. I
I'm
think
afraid that when it comes to mainstream investors, their initial instinct is not to go for bullion. Their initial instinct is to go for government bonds, right?
I believe you're correct. I don't think very many of them consider gold and silver.
When they talk about a rush to safety, they mean bonds. But the thing is, if you're buying bonds right now, you're assuming that inflation is over. That as though we're having deflation right now, and that means that inflation is over because inflation is very bad for the bond market. especially when it comes to long-term bonds. But, I assume that inflation is here to stay, that inflation is a long-term phenomenon, that even if we have a short bout of deflation, inflation is going to continue. So once the Fed intervenes, once the Fed cuts rates back to zero, once the Fed restarts QE, you're going to see a resurgence of inflation. And then those people who went to bonds are going to get annihilated. Yeah? They got
Yes.
smacked by the stock market, and then they're going to get whacked by the bond market. And only then, after they see that inflation continues, even though we have a recession, we have both a recession and inflation, which is stagflation. Once they see that we have stagflation, maybe then they'll consider getting into bullion, especially if they see that bullion is hanging on. If it continues to, if it is able to rally from here, then you'll see the public discovering gold and silver.
Yeah, they might start paying a little more attention to it. Yeah, I think that it was pretty painful for silver investors last week, and so I think that they can relate with the stockholders. Um, you know what's interesting is, according to the Motley Fool in 2022, it was estimated 58% of U.S. households held stocks. Um, And of the stockholders, it's estimated the bottom 50% of US investors account for about 1% of the total stock investments, and the top 1% of investors own about 50% of the stocks. So it's a relatively small amount of people that um, would get seriously impacted. I mean, now a lot of these people are loaded, um, so to speak. And so they do go out and have an impact on the economy when they make purchases and stuff like that.
I think that what we're seeing right now is the initial stages of the crisis, the great crisis we've been predicting all along. Again, I think that the tariffs are just an excuse, that this recession is truly induced by the fact that the Fed raised rates, was trying to battle inflation. But of course, when you try to do that, when the flow of cheap money stops, then all the bubbles tend to pop. Now, why didn't it happen immediately? Why didn't the stock market tank immediately after the Fed started raising rates? Well, there was an initial drop, but later it recovered and it set new all-time highs. How come? Well, my explanation was fiscal spending. The Biden administration, well, as we say, they spent like drunken sailors all throughout his presidency, and they as though compensated for the fact that the Fed was no longer easing. But now the Trump is in power and he's trying to cut spending, right? We have Doge. They're trying to make things, to cut waste and
Absolutely.
fraud. But yeah, so that means that you don't have a monetary stimulus from the Fed, and you no longer have fiscal stimulus from the federal government. Yeah, so you don't have any stimulus, not from the Fed, not from the federal government. Then everything starts to tank. Everything starts to roll over, and I think that it was in the cards. We could have seen it coming for at least a few months, if not 6 months, at least 6 months. The indicators were there. The market, as though, was looking for a pin. The bubble was looking for a pin in order to pop, and Trump simply supplied the pin right now. The only people who I think are going to do well are the stackers. The stackers, they have like this ace up their sleeve. They have their stacks. Gold and silver are supposed to do well in such an environment. And I think the stackers are the only one who are going to come out of this fine, or perhaps even wealthier than they are right now.
I think you're right, and I'm glad that you brought that up. In regards to what is happening currently, I also agree. All the indicators have been there, and of course, they were talking about it for months. The Buffett indicator and Warren Buffett had moved into a cash position, um, and so the writing was on the wall, and this tariff situation kind of kicked the ball into motion. It was a great excuse, and it wouldn't surprise me if um, they think that somehow they're going to save because the stock market. A lot of people were saying it had been overvalued for a long time. They're also saying that the housing market's overvalued. They've been saying that for a long time now, and well, how could he try and prop up the housing market a little longer by cutting rates? And if he did a rate cut, they're going to end up they're going to blame everything they can on Trump right now. The media will.
Oh, definitely. I really sympathize with Trump. I think that if it's not clear from what I said previously, I think he's trying to do the right thing. I think he's trying to fix the American economy. But I think that things are so messed up and that the amount of waste and fraud and corruption we have seen over the past decade or more, it's just so great. It's beyond what can be fixed. Certainly by one man or one administration, it's just too much, and we need to pay the piper. It's time for all this malinvestment to unravel. We need to see some pain, some true pain, and only through the pain and the bankruptcies can you start fixing the economy truly. Because I criticized Trump at first, but only because he promised a golden age, only because he didn't level with the American public and told them that, hey, in order to fix this economy, we're going to have to go through some pain, because that's the truth. Now, of course, it's very difficult for a president to say such a thing, because once he says that, the markets immediately tank. So he didn't want to tank the markets, so he didn't say it out loud. But anyone, like anyone who knows what's really going on with this market, realized that in order to fix the economy, you have to go through a recession. Like a recession is the period of time in which you fix all prior mistakes. You have to go through a recession in order to get to a better place.
Yeah, you're going to have to deal with that correction, rip off the band-aid, so to speak, and just deal with it, you know, because there's a wound festering under there that's going to get really bad if you don't endure the short-term pain to try and deal with it. In regards to the tariff situation, what has caused a lot of panic recently in the markets. Now, a few of these tariffs have already started, and additional tariffs are going to kick in this week. Um, what do you think the impact of the tariffs is going to end up being? And do you think the market's going to kind of wake up and at some point and go, oh, these tariffs aren't affecting the metals, and the metals will kind of decouple from the rest of this activity? What do you think about the tariff situation?
Well, tariffs in general are meant in order to make imports artificially more expensive so that your local products seem cheap, relatively speaking. And this is supposed to encourage your local production. And this way revitalize the industrial base, reconstruct the industrial base of the United States, which is a good thing. Like, this is a very positive approach in my view. I think the US should reconstruct its industrial base. The thing is that that involves short-term pain, because it means that right now, right, the factories are not built yet.
Right.
The
The jobs aren't
Yeah,
here right at this moment.
yeah, the products don't yet exist. They will exist. They will be created. Everything will be created once it becomes economically viable to produce again in the United States. But that means that right now you have to pay more for everything. And you're going to have if there is an American product, an identical American product, then you're going to you're going to get it. It's going to be more expensive. And if there isn't an equivalent American product, then you'll have to pay the tariff in order to get the foreign one. So either way, you're going to pay more. So it's immediately you get a boost to inflation, this one-time boost, and everybody's thinking about the one-time boost. They forget that there are second order effects because if prices rise, then people can't afford all sorts of things, and they demand higher wages. Then you have to pay higher wages. Then other things, other services, other products, even those who were not impacted by the tariffs. Still, everything is going to get more expensive because you have to pay higher wages to your workers so they can afford the products which were impacted by the tariffs. So there are second order effects to everything. It's not going to stop there. It's like it's pouring a huge amount of fuel on the inflation fire. So, and everybody, I've heard claims, people saying that Trump is trying to induce a recession or a panic in the stock market in order to force the Fed to cut rates so
Oh
that he
no.
can refinance the debt because there's so much of the debt is needs to be refinanced in the coming year, and he needs lower rates so he can refinance the debt more cheaply. And again, this is kind of an
But
optimistic thought because they're thinking that perhaps everything is planned. But how can you lower rates when you have inflation? Like, what do you expect the public to buy bonds at a negative real rate and lose
right.
money due to inflation?
No way. Yeah. That's
I
not
mean,
gonna
like,
work.
people are not, at least foreigners are not going to do that. They're already not very enthusiastic on, buying US bonds. So I think instead of buying bonds, people are going to buy bullion.
Hopefully so. I feel like people will find it again at some point. More people will find it again at some point, is what I believe. I mean, it wasn't that long ago that it was pretty common for people to hold, 10, 15% of their wealth in gold and silver. Um, and so it wouldn't surprise me if people find their way back to it eventually. Almost like people being like, I'm going to grow my own chickens. And then they're like, wait, how did people used to store their wealth a long time ago before they had to rely on the system and be at the mercy of uh, inflation and, what the Fed might do and all these things. Um, and I do think the vast majority of people will go into bonds. I have heard of people parking their money in, yield-bearing savings accounts that they could get it out of quickly, thinking they would re-enter the market at the right point and messing that up. So everything gets really dicey in these big stock market sell-offs for the investors.
Yes,
Uh,
but I think it's going to end once people discover that inflation is here to stay. Because if people get, I don't know, 5% on their CD, or I don't know, 5% on their
Money
bond,
market, bond.
and
Yeah.
yeah, and inflation is 10%, then they're losing 5% per
Right?
year, right? And then the excuse always when people were talking about gold, oh, why should you hold gold? It has no yield. Well, it's better than a negative yield. Zero is better than minus 5%.
Absolutely. Yep.
So once people realize that inflation is not over and that they're losing money in the bond market, then they're going to see the light. Then they're going to discover bullion. It's a process. It's not going to happen overnight. It's going to, yeah, they need to overcome all that propaganda which they received all those years that told them that they should, stay in stocks and bonds and what bullion. That's something ancient. That's something from a different century. We're living in the future now. No, no. The laws of economics did not change. They're still here. And the laws of economics say that in times of inflation, certainly in times of stagflation, you need to be in bullion. And people are going to discover it, very gradually. It's going to be very painful at first. Eventually, they're going to come.
Oh, I think you're totally right. You know, there are occasional boomers around who will bring up the events of, like the late 1970s or early 80s. A lot of them heard about it back then, about the blow off top and people losing money um, in the silver market. And it kind of stuck with them. And that was almost the generation that needed to be the flag bearers too. So it really did lose the mainstream public's attention, but I could definitely see people coming back.
I want to get back to tariffs because there are other implications of tariffs that we need to mention. And that is the fact that once the United States implements tariffs, for instance, on China or the European Union, you could have retaliatory tariffs in response. And this
Right.
is exactly what we're seeing right now. I mean, China is intends to impose tariffs on the United States. Canada is trying to fight back. The European Union will probably also place tariffs on US imports. So what you get is a trade war. And in a trade war, everyone loses because um, your imports become more expensive, but also your exports are suffering because your exports are getting tariffed by the other side. So it just, inflation everywhere you look.
Right. That definitely makes sense. And it does look like these retaliatory tariffs are probably going to take place. We haven't seen too many countries show signs that they're going to come to the negotiating table at this point. Um, it looks like we got some positive news in regards to that from a couple countries. One of them being Mexico. And the interesting thing with Mexico and Canada is that USMCA, it's known as the US Mexico Canada Agreement. There's several categories that won't get affected by the tariffs. And so who knows when it comes to just like the really basic stuff, plastics, rubbers, food, produce. None of that's going to get taxed when we're exchanging those products between Canada, Mexico, and the United States. And for some of the really cheap, like bulk stuff that we rely on with China for now, Mexico can actually produce quite a bit. And if they wanted to expand, who knows? But obviously, it's not something that'll happen overnight. Um, and so this is going to hurt. But hopefully we'll get through this with as little pain as possible, and we will end up coming out stronger at the end. Um, and I do think it's a really good time to be holding physical gold and silver.
Yeah. Now, speaking about gold and silver and tariffs, well, we've learned that gold and silver are exempt, will be exempt from the tariffs. And as a matter of fact, this was the excuse for the sell-off in gold and silver. Because, as you may recall, in recent months, we've had this premium of futures compared to the spot price of gold and silver. And that meant that there was this rush to import bullion into the United States. And, the mainstream narrative was that this was due to the fear of tariffs. And now that bullion is exempt,
Yep.
the premium has collapsed, and there is as though there isn't a reason to go on importing that bullion, and there's no need for the price of gold and silver to rise, so their price dropped. And I happen to think that this is just a narrative. This is not the true reason that gold and silver was moving to the US. I think that the true reason is inflation and the fear that the gold and silver which people held, for instance, in London, didn't exist. And certain people wanted to make sure that they truly do have that bullion, and that's why they imported it so they can hold it physically. And why do I say that? What's the indication to that? Is the fact that we've seen such a record amount of people standing for delivery, for physical delivery at the COMEX. And they didn't just buy it and continue to store it at the COMEX vaults. No, it exited the
Yeah,
COMEX vaults.
entered
It
and
left
left.
the vaults. So it wasn't just about the location of the bullion. It was about holding it physically. It was about knowing that you actually have it, you own it.
Right, absolutely. And you have cut out that counterparty risk of the other country. Do they still have it? Do they not have it? And it's interesting too because recently Germany asked for gold back that's being held in the United States. So a lot of countries are starting to feel this way and are interested in getting their gold back in their hands.
I want people to, don't believe the propaganda. Don't believe what you read on mainstream news because there's just spin attached to everything. Um,
Absolutely.
look at the big picture. Look at the long term. We have inflation. Inflation is not going anywhere. That's the reason, the true reason to hold bullion. And that reason is not going away. It's going to stay. And even if we do get some short-term volatility in the prices of the metals, it was to be expected. We weren't sure if it's going to happen or not, but here we are, and we can see that we have that volatility in the price of gold and silver. Who cares? If you're holding physical gold and silver and you have no intention of selling it anytime soon, it doesn't affect you. You can endure this correction. You can just hold tight, wait for the public to realize that they need that bullion, that they want that bullion, and prices eventually are going to recognize that and start climbing again. And I think that long term, I think about what we've seen in 2020. You know, the initial stages of that pandemic. The price of gold dropped, the price of silver dropped tremendously. But by the end of that year, it recovered completely. And as a matter of fact, gold set new all-time highs in 2020. So I think we're seeing a repeat of 2020. I think there's an initial panic. I think the price is dropping. But, by the end of 2025, we could see all-time highs for both metals.
It wouldn't surprise me at all if you're right. I think that quite a few people might take advantage of the dips going forward, and it wouldn't surprise me if we see history repeat itself like that. It's the gold to silver ratio has risen recently. It's just over 100 at the time that we're recording this. How high do you think the GSR could go potentially during this meltdown?
That's kind of a painful thing.
Yeah, not the funnest thing to talk about.
No, no. Because of course we all want to see the gold to silver ratio dropping. Well, first of all, when the metals are rallying, the ratio is falling. This indicates that silver is outperforming gold as it should. But again, during 2020, we've seen the ratio spike all the way to, I think, 125. And that kind of tells us that it has the potential in the environment, in the situation of a market meltdown, we could go back to that ratio again or even surpass it. So um, that perhaps indicates the fact that the gold to silver ratio has again broken out, the fact that it has reached 100 or more. Right now, it has a bit of a resistance, but I can certainly see it if the correction in the metals continues, then I can see the ratio continuing to rise, perhaps reaching 125 again. It's perfectly possible. Again, I wouldn't take it too much to heart. It's just something transitory.
Yeah, almost expected at the beginning of this sort of economic cycle, and great buying opportunity if it does get any higher than it is right now. Um, we'll see what happens. I I'm not sure how much damage they'll be able to do to it this week, but I feel like the floor can't be that much lower um, than where they got it to today. I mean, I don't know that for sure, but if
I,
it goes to 20 cents, I'll be buying a lot when I'm dollar cost averaging because I'm not going to stop buying it because at some point it's going to break out. Um,
Look, we don't know how low silver can go because, okay, so it has strong horizontal support at $28, in my view. I really think it's going to be difficult to take it below 28, but it's possible. It's certainly possible. And, in an extreme scenario, I can even imagine it, going all the way down to the low 20s. It's perfectly possible. And the excuse is going to be that, oh, we have a recession. So industrial demand is falling. So we don't need silver anymore. So please sell your silver because it's going out of fashion. And,
yeah.
that was the excuse in 2020. I'm again reminded of 2020. They told us in the initial stages of COVID, that there's a drop in industrial demand, and therefore silver should fall. And it went all the way down to 12 or $11 per ounce. But it happened very briefly. And at the end of the year, looking on the numbers, we discovered that there was no drop in industrial demand. Because, when you look at the grand scheme of things, industrial demand kept up.
So that was just a narrative that they were pushing. That was a kind of a psychological operation, so to speak. So do not let them get your silver for some low price.
Some
Um,
ridiculous price. I think that the big banks are trying to offload their shorts. They need to offload their short positions if they have any understanding of what's happening. And if they have any understanding that we're facing long-term inflation, they need to get rid of that short position, and preferably at a lower price. So for them, any commotion, any turmoil in the markets, it's like it's the excuse or the opportunity to slam the prices so they can offload that short position at a lower price, and as though, move it to the retail investor.
yeah, I bet that you're totally right about that. I could see them wanting to offload their short positions, and then the other side of that coin for them is they get to absorb some physical silver from the general public, stripping them of their wealth, stripping them of that potential that this investment could make them in the future, and then they'll have that physical in their possession that they could melt into 1,000 ounce bars and keep their little charade going for longer.
Yeah, there are all sorts of rumors that, for instance, J.P. Morgan is sitting on a huge amount of physical silver. I don't know if it's true or not, really. What is important is that so long as they do have that net short position, they have this risk. If the price starts running, they have this risk of losing a lot of money. So in this environment, in this current environment, they need to offload those that position, and I think they're looking to do that, but they need to do that, at a more favorable price. So it's for them. this is the opportunity to do so. So, you know, don't fall for it. The official price, it can fall, it can rise, it can do all sorts of incredible things. But when you go to your local coin store, you'll probably discover that you can't buy it for a lot, perhaps a little, but not a lot cheaper than you could like a week ago, because premiums are going to start growing, compensating for the drop in the spot price. So hold on to your bullion. If you're able to increase your position responsibly without taking any debt, then perhaps you should do that, or perhaps do it gradually because the price can also continue to fall. Just be careful. Just be careful. Don't let go of your bullion.
Absolutely. Imagine if somebody had taken out debt, you know, to buy some silver about this time last week, they'd really be kicking themselves. So that's excellent advice. Don't
Look, I
overextend
bought some.
yourself.
I'll be frank. I bought some just
I did
before the
as
price
well
collapsed.
for the Silver Squeeze 2.0 event.
Yeah, it wasn't a lot. It wasn't a lot. Just a few more ounces. I'm not sorry, because here in Israel, um, it's very difficult to get silver, so we get it whenever we can. And even now that the official price has dropped, I don't think we'll be able to get silver for much cheaper here in Israel. So I don't mind. Look, I bought it when it was much cheaper a few years ago. So I'm buying a few more ounces here at these prices. Yeah, I'm averaging in.
Absolutely. It's something where when you stack over time, you think back to yourself like, oh, that was great when I put in that big order when it was under $20. And so I also look at it that way as kind of that the average price entry point because it might look ugly this week. They might take advantage of the situation on Monday, the excuse that, especially if the stock market has a really rough day, that would be a great excuse to pound the silver price. Um, so just hang on to it and be patient because in the future you will be happy that you have it. In my opinion, that's what I believe. And of
Yeah.
course, nothing in this video is financial advice.
Right. We're not financial advisors, but for what it's worth, I think that if you're in bullion, I think you're in a much better position than people who are currently in the stock market or the bond market or the crypto market. I think bullion is the safest place to be right now.
Absolutely. Well, Orn, thank you so much for coming on to talk about the current situation with the market. Your insight is
Thank
always
you.
appreciated.
Thank you
Uh,
for having me.
you bet, absolutely. There will be links to his Twitter, YouTube, and Rumble accounts in the description, so please check them out. Thank you so much for watching today. Don't forget to hit the like button and subscribe so you don't miss our next interview. And I hope you all have a great day out there.